Danny, we're live.
All right.
So let's not say anything stupid. So welcome everybody to Danny and Jason. We're mortgage loan officers, and we just want to talk about life. Talk about life a little bit. We're going to be doing this more often. We're live on the YouTube. We're live on the LinkedIn. We're live on Facebook right now. The biggest thing, Danny, I want to talk about today, and I know you have some things to talk about today too, but I want people to understand that you do not need 20% down to buy a house. VA loans, 0 down. USDA loans, 0 down. FHA loans, 3.5% down. We go down to a 580 credit score. Conventional loans, 3% down, 5% down. I read a stat the other day, Danny, that there are 9 out of 10 people renting right now believe that they need 20% down to buy a house, and that's holding them back from calling you or myself. So that was my main thing I want to talk about today, Danny, with you. But Danny's from Savannah, Georgia. Danny, tell us a little bit about yourself, buddy.
So Danny Archer with USA Mortgage, the Archer Mortgage team. So I'm down in Savannah, Georgia. I'm licensed in Georgia, Florida, South Carolina, Kentucky, Tennessee, and Texas. So spent 27 years in the military. Found this as a second career. Honestly, I do it because I'm a plain speaker with no agenda. I love to teach, take care of people, because honestly, the mortgage industry, I mean, me personally, unfiltered, there could potentially be a lot of vultures out there that only are looking for just closing a deal. That's it. My plan is, what's that?
Yeah, go ahead, Dave. No, go ahead. I talked on top of you, buddy. That'll be hard with both of us talking. We need to raise our hand.
Yeah. So, my approach is this, like, I'm a very, tight group kind of person. So I try to take every client on like it's somebody that I've served with in the military and went to combat with. So, those relationships are tight. So I have no agenda. If it's messed up and we need to wait, I'm going to tell you. I'm not going to feed you. I'm not going to try to be just a transactional guy. My approach is I want to be your go-to for however long I'm in this business. And if it's not me, then it's going to be a person that I pass the baton to when it's time for me to shut it down. So,
yep. The one thing I don't think we talk about enough that you and I and Kim and Crystal and our entire team offers is customer service. It seems to be, what's your rate all the time? I used to be in the butter business, Davey. I was in the butter business before I got involved in mortgage. I ran my in-laws' creamery, and I hated it because I didn't hate it, but I sold a commodity. You either have salted butter or unsalted butter. I mean, that's really all there was. And that's honestly why we developed hand-rolled butter. If any of you are ever in a store and you see Amish country hand-rolled butter in parchment paper, I'm the reason that's everywhere in the United States now. Because I wanted something to sell with a little sizzle with my steak. Because Danny, like when a realtor refers one of us, Crystal or Kim, to one of their clients, I really wish people would listen to the real estate agent, because no real estate agent is going to refer you to a lender that's going to do a crappy job. Because Danny doesn't get paid, I don't get paid, the realtor doesn't get paid until that loan is closed. So when a realtor says, hey, I want you to work with XYZ lender, it doesn't mean we're paying them, because we can't pay them, that there's TRID and all these rules. They just know that when you call Danny or you call Jason or you call Kim or you call Crystal, whatever market you're in, obviously we want us to call you, but we understand that we can't be every lender for every real estate agent. But trust your agent on that. They're not going to send you to somebody who's going to screw up your loan. I had a deal the other day, Danny. I just could not talk these people off this other lender, and they spent $6,000 to buy down their rate, and they didn't need to. And that's after I told them, like, listen, USA Mortgage, once you make 6 payments up to 3 years, we'll pay for your lender fee and we'll pay for your appraisal, saving you a couple $1,000s. And that's why we hear that cliche, marry the house, date the rate. And, on the screen right now, we're flashing these interest rate things because, Danny, everybody's waiting for these rates to come down, and it's going to be a madhouse again. And the houses are you have to offer 10, 15,000 over to buy that house to get an accepted offer. And that's really what I've been telling my clients. Crystal's been telling her clients, you've been doing the same thing. You can get pre-approved now in the market that you're looking for, the price range that you want to be. Start building equity now. And then then you can refinance later because these rates are definitely, they have to come down in the next couple of years, Danny. They have to
That's
come
right.
down in the next couple of years.
So it's interesting that you talk about the equity piece, because a lot of times when I'm working with a client or something, I try to build an appreciation forecast for the next 5 years using MBS Highway. And the average appreciation that I see on the average median home value purchase, like down in Savannah, it's like 330,000 or something. But you're looking at $60,000 to $70,000 of appreciation over the next 5 years. And so, talking about waiting for the rates and all that, a way that I try to describe it is if you're watching a soccer, like an English soccer game, we'll call it football for them. And everybody sitting on the fence is watching the game, and the people out there playing right now are the buyers going against the grain, right? And right now there's seller concessions that are potentially available in your market to help with your closing costs.
Yep.
So, if you're able to get in and go and eat that slightly higher payment for that at minimum of 6 months, you're talking maybe $150, $200 a month on the additional of the payment, which I get it. For some people, that's going to take them out of the equation.
Right.
But, if you can do that, there's potential for you to get, up to 4% on a VA loan. Some loans are up to 6% seller concession. So $300,000 house will just go worst case scenario, and we'll throw 3% seller concessions. You're talking $9,000. That's going to eat up the predominance of a VA loan's closing costs. To not do that and wait till the interest rate goes, it's going to be like the zombie apocalypse horde is pushing into an area. Now it's going to turn into a seller's market. Seller concessions are gone because they don't need to, because they're having 10 and 15 offers on a house. So I always say pivot, break from the formation, get out, get the house that you want now, eat the slightly higher payment, all in preparation for the refinance and no earlier than 6 months. It's a great way to do it and save a ton of money.
And we as lenders don't let you be house payment poor. Somebody sent me a funny meme the other day, Danny, and it said, I actually will put it up on the screen. It said, my lender won't approve me for a $1,200 payment. Meanwhile, I'm paying $2,000 for rent. And that's because I didn't work during the recession, 08 and 09, during those crazy years. But, debt to income ratio, we can't as lenders let you be house payment poor. We don't want your house back. Let's be honest. I mean, that's why there is an appraisal. That's why if you buy, if you're getting a zero down loan, a VA loan, you can't buy fixer uppers. You can't buy a house with a VA loan with a crappy furnace and a crappy roof. You're getting a zero down loan. We're not going to let you. We don't want you to buy a house that could potentially, you could say you could walk away from, because I don't got $30,000 to put a new roof on this house. Everything's there to protect the buyer. Now it's set up to truly make it a good experience for them. Now, you mentioned earlier the $60,000 to $70,000 of appreciation next 5 years. I put that up on the screen. And again, we're live on your Facebook page, your LinkedIn, my LinkedIn, blah, blah, blah. We're live on a bunch of that stuff. Explain to everybody what that means again and where you got that stat.
So essentially what I can do is plug in a zip code in a certain area that somebody's looking to buy. And it will draw from the public information, the average medium income of that area, as well as the average medium household value for that place, plot that, and then using the software, it will, based off of all of the markets and all that stuff, it will estimate the trends and what that 5-year appreciation is going to look like. And then what I try to do is especially if you're looking at multiple zip codes, I like to give that to a client so they can say, oh, look, this is actually a great investment for me. Like, for instance, down here, Elabel is blowing up because of the Hyundai plant, or Tybee is always a great area. And those areas are almost 9% appreciation. That's incredible. To sit and wait and wait for rates or whatever, you might not ever get into it. You end up renting for the next 2 or 3 years whenever you're financially strong enough to go ahead and assume that. And look, people, how a home purchase is a great financial plan, for yourself, right? So, the VA loan, you talk about the inspections. The beauty of the VA home loan inspection is it protects the veterans from buying a limit. That's it.
Yep.
Like, you can't buy a house that has a terrible roof. The air conditioner is about to blow up. The water heater stinks. All the appliances are potentially broken. The floor's rotting out. Things that are huge dollar amount things. The VA inspection, that protects you. Yes, it might make the purchase a little more difficult, and the sellers might be resistant to make those improvements. But in the end, you're going to have an excellent and safe house to move into.
And that's what, there's so many, I think sometimes people kind of think of us as just money hungry lenders. And that's, we don't let you, and Danny just said it, we don't let you get into a situation that, it's not good. We're not going to let you get in above your head on a payment that you can't afford, just because we can't by law. Debt to income ratios, we don't want you to be house payment poor. And whatever loan program that you get into is there to protect you so you don't get into a situation like that. You know what I mean? Because everybody's dream, Danny, and I see this a lot. Everybody watches the hot chick in Texas that does those flipping shows or whatever. Everybody wants that first house to be a flipper, right? I'm gonna flip houses. No, not everybody can do that. And you can't buy junky houses with an FHA loan or a zero down loan.
Right.
Those are considered investment properties. You gotta have a little down payment on that. But you and I focus on primary residences. Yeah, we can do vacation homes. Yeah, we can do investment properties, but I would say 95% of the business that you and I do is primary residences where people are going to live. And that, having that full repertoire of VA, FHA, USDA, conventional loans, it really opens up the whole toolbox. We can go from a 580 credit score all the way up to whatever. And it makes me feel really good, Danny, because when somebody calls me or they call you, if we can't, I don't ever tell anybody no, Danny. Like no, I can't do it today. But
right.
if you get your credit report up a little bit, or get your credit score up a little bit, or hey, I need that bankruptcy to, I need that bankruptcy to be at least 2 years out of discharge date, or hey, I need your divorce to be final. All those different situations like that. That's what I love about you and I, Danny, and Kim and Crystal. We don't just tell you what you want to hear. We tell you the truth. Now, you don't always want to hear the truth, but once you rather know, I mean, do you remember the first time you borrowed money, Danny? How old were you? I mean, I remember going in to buy my first car by myself. I was like 18 or 19, and I was scared to death that banker was going to tell me no. And I sat across from that desk, and now I kind of feel like that's kind of what we are. But
right.
we have the best job in the world because we get to help people live their dream. And that's the customer service end of it is what I'm really proud of, what we offer, Danny, our clients and our real estate agents. Being available 7 days a week. We work when our clients need us. Is it always fun? No, not always. I mean, there's been times I've walked out of church because my phone rings. I go out and talk to a real estate agent, but I don't say, hey, I just walked out of church. I say, hey, how's it going? What do you need today? I can get that for you in an hour, right, or whatever. So that's just really, I don't think lenders get enough credit for customer service, Danny, and what they can offer people, to do all of that. It's so much more than just an interest rate. Just so much more. And this is that funny meme. The bank says, I can't afford a $1,200 mortgage, so I pay $2,000 rent instead. Now, the flip side of that is, do you think the landlords are just going to keep dropping rents? Danny, what is one thing in your life that's got cheaper since you were born?
Nothing.
So do you think houses are going to get cheaper?
No.
So, I mean, that's just where, I know the cost of money isn't where it was. And I hate it. People hate it when I tell them, do you know like a 7% interest or a 6.5% or whatever we're at today is that's still like over like the last 30 or 40 years, that's pretty average. But our brain is so COVID money, 2%, 3%, 4%. I would love it if we could just settle in on a nice 4%. Danny, I know you've been in the business not as long as I have been, but I had some people during COVID when rates were 2.5. You know what they told me? I'm going to wait for this thing to bottom out.
Wow.
And that person called me 18 months later because they didn't buy. And then I think the dime rate was 5.5. Guess how much home he qualified for at 5.5 versus 2.5? $200,000 less. Same payment. And that's hard because I really wanted to help that guy. You know what I mean? But I couldn't. And now he's still renting. And maybe he's this guy right here like the Fonz. Hey, I love paying rent. You know what I mean? No,
I do.
When's a good time to rent, Danny?
So the other thing that I like to talk about is like sometimes I'll slow down a client because I think we can do better with their credit and we can get them better pricing. So I tell them to pause, do an assessment of their credit, and then try to get them to do some corrections so we can get a rescore and potentially jump up and get way better pricing. Most people I don't think are probably going to do that. I'm actually doing that with a client right now, specifically. So
good.
let's talk about buying down a rate right now, because I know we floated that one on the bottom of the screen. So, buying down a rate, say we're at 6.5 right now, it might cost you a few $1,000s to get down to maybe what, 6.125, right? But with the estimation of what the market's saying and what the industry is saying is that we're supposed to get into the fives. Say you buy that, it's a temporary feel. It's a Band-Aid for the pain right now. I'm like, no, I tell people, do not buy down now. That's a waste of money, because whenever the interest rates drop down in the high to mid fives, guess what? And you decide to refinance, that money that you just spent for that buy down, gone. All you did is buy it. You just got access to a room. Save that money so that whenever it is time to refinance, then you buy down and you make that a profound jump down as far as possible. Because ideally, you would like to get to what is potentially going to be your 30-year interest rate. And, you can watch the little slideshow, trying to get down into those 2s and 3s that happened during COVID. Those were one-offs just to save the industry. Yep. That's not going to happen again. So hoping and waiting for that, dumb.
Yep. No, I agree. I think the more we talk about it, Danny, we can do this, as often as we can. I think we'll try to do this a couple times a week, maybe 3, okay, based upon our schedules, sure, different things like that. But I've been running some radio stuff. I told you this just on the phone when we were talking. I told you I'm fat. I need to lose some weight. So you help me with my diet. So any of you watching right now, if you do intermittent fasting, let me know how that works. Danny told me to eat about 6 o'clock at night and then wait. Obviously don't eat before bed, drink some water. And I was drinking water like a crazy fool last night, Danny. I pissed like 3 times in the middle of the night, not in my bed. I got out of bed to do that, Danny. So just so you know.
That's good.
But I got until 10:30 this morning before I ate again. And like you said, your body is going to start, I don't know. I'm excited for that. So thank you, because I'm as heavy as I've ever been again. And that sucks. But I was down at 240 last summer, and I got back up to like 270 again on Sunday after vacation. And man, I had a lot of fun on vacation. I'm not going to lie to you. So it's all good. But it's time to get back at it. I want to be a skinny mortgage lender, not a fat mortgage lender. So
it's a life challenge of aging. So Jason, I will say I got to start wrapping up here, because I got to go start the afternoon duties here shortly.
Yep.
But
yeah, for those of you, Danny, what's the best way to get hold of you? I'll put your phone number on the screen.
Sure. It's 912-901-6522.
And when somebody calls you for the first time and just say, the most common question I get, Danny, is where do I start? What do you say?
Well, first, I like to at least see what their goals are, what their current situation is. Let them talk a little bit. And then, for us to do a true assessment of it, they need to do the loan application and upload the required documents so we can do the good analysis, because I could talk in circles all the questions, but until I can know what chess pieces that we have to essentially play with, we're just talking in circles. So, I would say a good conversation. Our technology with USA Mortgages, honestly, it's fantastic. It can't be any easier. You just follow the prompts, upload the required documents. There's a scanner in the app. Let us do the work, do the analysis. Depending on the timing of the day and whatnot, we can get a pre-approval done most of the time same day if we get the information as early as possible. So it's imperative that if you want to have a conversation and you want to be like, I will call and I will. You can call me and ask questions, and I will give you kind of the warm and fuzzy of what the market's like and so forth and so on. But, if you want to actually get to it, I'll just say, hey, let's get the loan app. Let's do some documents. Let us do an analysis so we can set a price point. Because I think the worst possible thing someone can do before they start the pre-approval process is start looking at houses, because inevitably you're probably in the wrong aisle at the store. So
I like that. I like it.
Yeah.
Well, I'm Jason Schultz. This is Danny Archer. We're just going to get together and just talk about mortgages a couple times a week. What we want from you, if you see this video, if you are a homeowner and maybe you want to learn about a refinance, reach out to us. Or maybe you are a homeowner, but you have a friend, a family member, a coworker, somebody that's looking to buy a house or wants to buy a house now, 6 months from now, a year from now. I don't care if it's 5 years from now. And Jason, how do I build my credit? I'll give you advice like that. Just pick us up and call us. Pick up the phone and call us. Reach out to us. Don't be afraid. Don't waste your life being afraid. So, yeah, that's all I got, Danny.
Okay. Well, Jason, I appreciate the time.
Thank you for doing your hair today. You look sexy. So.
Yeah, I'm sure. I'm really crushing the bangs, aren't I?
Well, I need a haircut. I got a lot of gel in it. So.
All right.
Thanks for watching, everybody. Danny, hang tight for just a second. Have a good day, everybody.